Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN AM for Wednesday, March 18th, 2020. And here are our top stories: calming the DC market storm and the evolution of target date funds. And joining me now to discuss this and a lot more is Randy Plavaika. He's a reporter with Fund Intelligence. Randy, welcome back to the program.
Thanks for having me, Jeff.
Well, it's certainly very interesting times. So let's start with call center volumes. I know you've recently wrote a piece about this, the coronavirus, market volatility, a lot of this activity in the market, unsettling the people and driving people to call centers around the United States. What can you tell us about this?
Yeah, so and I think kind of like anything, I think a lot of the panic over, whether it's getting my groceries for the next 2 weeks or getting supplies for the foreseeable future, people have been doing the same thing with their money, obviously. They want to be sure it's in a good spot. And so what's happening is you're seeing a lot of people reaching back out to the people that are running their money, be it their advisor, be it their record keeper, be it whoever is, in touch with their funds, getting in contact with them and then basically assessing what do I need to be doing right now to be making sure that I'm in the best spot to either avoid a significant correction and a downturn, or B, just steady the path and keep going right now. And firms have been coming up with different ways of handling that. Obviously, there's a ton of calls coming in, I'm sure, on a daily basis, even on an hourly basis. So it comes down to staffing. Number one, obviously, is having the appropriate staff to handle it. But then number two, not everybody needs a phone call. I think a lot of people don't realize the power of a web chat or of, a simple email or personal outreach from, an advisor, a tailored email saying, hey, you're good. I have you in my hands. Like, we're going to get through this. And although it's like, it's a bit of hand-holding, it definitely works in terms of, easing the mind of the investors, but also reassuring them that like this strategy is the right one and your money is with us for a reason.
Yeah, absolutely. And I talk anecdotally with people. I know there's definitely concern. And then when I talk to advisors and consultants in the space, I mean, it's stay the course, assess your risk tolerance. And I agree with you. It's about staffing. I had a conversation last week with Heather Lavalle, actually Saturday's show. Heather Lavalle, who is the president of Tax Exempt for Voya. They are fully staffed. I think the most important thing for Americans to know is that if you're in a 401k plan or a 403b plan or a 457b plan, your assets are held in trust. So they're not going to go into receivership as part of the organization. They can't be tapped into or taken by anybody but you. And I think that's number one. Renee, I want to ask you anecdotally, you have friends of all different ages, I'm sure. What are your friends saying about the market?
Yeah, so I've become the de facto person that when anything happens in the stock market, I'm the first person to get the text of like, what do I do? And I myself am not a financial advisor. I'm not licensed to be giving financial advice to them. And obviously, kind of what I could share with them is about as good as what their actual financial advisor can tell them. And what that is basically, right now, people that are in the younger demographic, when I would say under the age of 30, especially those under the age of 25, your 401k accounts are not that sizable. And, unless you've been pouring it heavily, to the point where it's not to say you shouldn't be worried, but it's like, listen, like this is going to be one of many downturns over your lifetime. It's going to be one of many roller coaster periods over your lifetime. So get used to it now. Basically, internalize that stress and understand that like, the stress you're feeling now is not the stress you'll be feeling in 1 year from now, especially people my age. I think they get the impression that there's a way to beat the market. There's a way to like counter this. And like, if I move my money the right amount of way, I can actually capitalize on this and profit. And it's like, that's the last thing you should be thinking of is, what's the cheapest thing I can buy right now that'll mature in 10 years and be, pay me tenfold. And the simple fact of the matter is it shouldn't be a matter of, where can I make my money off of this, but more so like, how can I just keep my existing money intact? And if your exposure is correct, then it's going to work out. Obviously, when you're younger, you're a little bit more in stocks and equities and such. But there's no harm in basically assessing where you're at and then thinking, okay, well, if this lasts for more than a year, then I should be thinking about changing the strategy. But for right now, it's kind of like, touching your face during coronavirus, hands off. So to to kind of relate it back to current times, it's best to not touch it as opposed to making a rash decision and then all of a sudden you're out all of your money and you have to start from, square one again.
Yeah. And I would just say, to your point, I mean, it's about dollar cost averaging. And boy, do I wish I was under 30 right now, just in general. I had my hair back, but you have so much time.
Yeah.
And you're right, the market goes up and down. And historically, that just is the nature of financial markets. And we went through something in 2008, which is absolutely horrendous. It looks like in this year, in 2020, it looks like the Federal Reserve and people are kind of had their game faces on, and so they're dealing with it as best they can. But for a younger person, now's not the time. And we're not offering financial advice, but I would just say, from a guidance point of view, now is not the time. Randy, before we go to commercial break, I want to, what is it like doing your job and for your friends doing their jobs, working remotely? So a lot of people, you're in New York City, or you work at least in New York City. Now people have to work remotely. How has that transition been for you and some of your friends? And we got about a minute left.
Yeah, of course. I think it's interesting. I think it reminds us the power of just personal contact and number one, just being face to face with people for meetings. But I think secondly, people need to realize that there's more than one way to communicate, right? Obviously you and I right now, chatting remotely this way, it's very powerful to FaceTime, Skype, et cetera, with somebody in the place of not being able to see them in person.
Yeah.
So I have a lot of friends on both coasts, East and West Coast. And the power of that's unmatched, whereas I can't always fly back to the West Coast to see them, but FaceTime is free. All I have to do is dial them up, and I think that's a perfect substitute for the time being.
Yeah, I think you're right, but you're right. The connection, I miss that. I mean, I have my wife and my cats, of course, but I miss that daily connection. Certainly makes it a little bit more tough, but technology abounds and allows us to connect. Thanks, Randy. When we come back, we're going to talk to Randy about the changing and dynamic world of target date funds. So stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as 1 day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. We're talking to Randy Plavaika. He's a reporter with Fund Intelligence. Randy, thanks so much for sticking around this morning.
Yeah, of course. Thank you.
Appreciate you letting us into your bunker. It's always nice to know you're working remotely, although you do have to go into the office from time to time. So let's jump right in. I want to put the coronavirus aside and let's get the lay of the land with target date funds. They are by far the most popular asset class, if you want to call it that, in retirement plans, receiving over 80% or more of net new contributions. So what can you tell us there? What are you hearing?
Yeah, and so a lot of the recent numbers, all the 2019 numbers, have pretty much been finalized at this point. And obviously, Vanguard is still number one. But what's really interesting right now in the space is that there's been this movement from target date funds to basically target date collective investment trusts, or CITs, as most people would know them. And for me, I'm always keenly interested in CITs, both from a mutual fund perspective and the parity they offer there, but also in the sense that you can get the same maybe benefits of a mutual fund at a lower price, which of course, a lower price is always a little bit better for the average retail or institutional investor.
Absolutely.
And I think what's interesting, especially in the TDF space, is that we have a lot of industry watchers right now who think that CITs could be on parity, if not basically surpass target date mutual funds in terms of just raw assets held in them within the next 3 to 5 years. I used to hear 5 years a lot, and now people are accelerating that to 3 years. I heard somebody say as early as 2 years, and I think that was a bit, not crazy by any means, of course, but to see a timeline where TDFs have been growing so exponentially, and then to see kind of CITs all of a sudden just pull up this big surge would be very interesting to me. So obviously, I think right now you're going to see a lot of people trying to innovate their products. How do I make my TDF better, more attractive, whether it's a low price or a modest price, or a pretty high-end boutique type offering. What that offers people, regular investors, is more options, better customization, and ultimately better results for retirement.
Yeah, I'm sorry I interrupted you. My
good.
apologies. But there actually is a bill in the Congress. So one of the things that you mentioned, CITs, collective investment trusts, they are not currently allowed in the 403B plan structure because of the requirements for either mutual funds or insurance-based products. So we can do a separate show on that. But if this bill passes, and again, there's a lot going on in the Congress, it's an election year, but has the support of many within the retirement industry. You're absolutely right. I mean, this thing could actually blow open the doors in terms of collective investment trusts, drive more costs down, which people want, and allow for smaller retirement plans to have access to these types of investments and the reduced share prices, because it is actually collective. Randy, when it comes to strengthening or enhancing target date funds, are you seeing different asset classes being added? What are you hearing in terms of decumulation? I know that you and your colleague Paul McMillan were actually going to hold an event this coming week about the Secure Act. Had to be postponed. But what can you tell us possibly about some of the enhancements and things that people are thinking about for TDFs with the passage of Secure?
Yeah, so I think some interesting things have been happening is people have been thinking about, how do I take this TDF that I'm invested in, especially the companies that are making them. They're thinking, how do I take this TDF that people are invested in and make it so it pays out fixed dividends over an annual basis or a quarterly basis? They're trying to think, how do I basically turn this TDF into an annuity when an investor hits a certain age, whether it's 65, 70, 72. Of course, there's certain legislation, certain regulation requirements as to when you can take actual money out. But the fact of the matter is, they're trying to think, how can I take this money that people have spent their entire lifetime building and then just give it back to them on regular payments, to the point where they're not leaving the vehicle whatsoever. They're still in the vehicle, they're still invested. I still hold their assets, but how can I give them a nice check that I write them every single month or every quarter? So that way they can basically afford their retirement that they've spent their whole life working on. I think in addition to that, you mentioned exposures to certain things, is that people are starting to consider the private markets a bit more. And obviously regulatory conditions around being in private equity, being in private real estate, et cetera, are a little foggy at the moment. But I think a lot of firms are interested in, how do I get, exposure, whether it's direct or indirect, to private equity, especially because it's a pretty popular asset class right now to kind of be, invested in and or looking into for better returns. And it's like, how do I bring the best of what's on the available market right now to my clients a lot of firms I think right now are trying to overcome that hurdle of how do I basically get that to my clients as quickly or as efficiently as possible, more so.
Yeah, I think private markets, you talked about decumulation, that's big. And I think also passive investing in a lot of asset classes, passive just outperforms the active over a long period of time. And I think more and more target date fund managers will look, the proprietary target fund managers will look at passive investments and how to include them, for example, in mid cap or small cap categories as well. Randy, just given I just want to get your opinion on this, and this is more anecdotal, but given the volatility that's going on, would you expect managers to just change their philosophy, target date fund managers change their philosophy, or just stay the course? What are you hearing in terms of your contacts?
I think it's a bit of both. I think right now the people that have been what you call monoliths, they've done the same thing for 25, 30 years, and that is their bread and butter. I think a lot of them are currently assessing, how do I make that better? I think a lot of people are looking at, how do I improve that?
Right.
I've been talking to a lot of people where I'm asking them, what does a TDF look like for you in 2021? And what does a TDF look like for you in 2025 in terms of its design, its layout? And people are starting to think about, well, how can I basically take what's already good about a passive fund or an active fund, maybe get the best of both worlds into one? I would hope and I would guess that hybrid offerings are just going to become more of a mainstay, wherein maybe every firm doesn't just have a traditional TDF. They have kind of a boutique offering that only they can have. And for investors, that's great news, because now if you're with a certain firm or with a certain record keeper, et cetera, that's holding these assets for you, it's like you're going to get ultimately better returns over time, / you're going to get, basically they're going to compete with themselves to give you the best product. So at the end of the day, ultimately the consumer should be the beneficiary of this, which is ideal for us, obviously. And for them, it just, adds to the competition. And hopefully by 2025, we have TDFs with all the bells and whistles that we could have ever hoped for. Of course, that's a bit forward-looking and out of it, or ambitious of me, but that's one's hope, right?
Yeah, I think I asked your opinion. I think that's a good place to be, and I think maybe that may be too aggressive, maybe not. Let me ask you. We got about a minute left, Randy. Managed account products, managed account services, they seem to be on the rise, and they actually can provide a customized target, almost like a customized target date asset allocation for a participant. Do you see that continuing to grow over time?
I think I do. I think right now you get a lot of high net worth and ultra high net worth investors that are very interested in those products because they want tailored offerings, right? They want bespoke, unique products that are either one of one or one of a select group of offerings that only they can get to. But I do see managed accounts, making their way down to the mid market to small market, because at the end of the day, every investor is unique. Everybody, for the most part, has a different plan for what they want to do with their retirement income, and I think managed accounts kind of offer the benefit of that, where you can get like this extremely bespoke, just like I said, uniquely tailored offering without maybe spending tens of thousands of dollars on, product designing it yourself, because at the end of the day, we shouldn't be designing our own products. We should let the firms handle that. But I do see it growing. I think right now it's a bit of a gray area in terms of who's going to carve out their way as the best in that space, or who's going to drive the most competition. But when I talk to a lot of firms, they're thinking about, how can I create better managed accounts, or if I don't have them, who can I partner with and collaborate with to create them, to get them on my lineup as fast as possible or as efficiently as possible, basically.
Yeah, I think a lot changing, especially when you bring in the conversation about financial wellness, the deaccumulation. There's a lot here. I think a lot for product developers to think about. And I guess we're going to see, we're not going to hold you to it, Randy, but we'll check in 5 years. We're of course going to talk before then, but we'll check in 5 years to see how accurate you were. By then, you're going to be running some big newspaper, some big periodical. Randy Plavaika, always a pleasure chatting with you. Thanks for bringing us into your bunker, and we will talk to you very soon.
Thanks, Jeff. Have a good one.
And that wraps up this episode of BRN AM. Have a financial topic or someone of interest that you think we should talk to? Drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, and so much more, check out today's edition of the Morning Pulse. So until tomorrow, I'm Jeff Snyder. Keep on saving, and don't forget, roll with the changes.
Attention! The Centers for Medicare and Medicaid Services has officially authorized new benefits that Medicare Advantage plans may include. To get the benefits you deserve, you can call the Medicare Coverage Helpline.
Hi, I'm Joe Namath. If you're on Medicare, this is important information. I called the Medicare Coverage Helpline and they instantly looked up my coverage. In this one simple call, they offered to enroll me in a plan that includes rides to medical appointments, private home aides, doctors and nurses' visits by telephone, and even home-delivered meals. The plan also includes dental, vision, hearing, and prescription drug coverage, all at no additional cost.
Don't delay. Call to see if the new benefits are available in your area.
Call the number on your screen now. It's free.
Call 1-800-757-1451. That's 1-800-757-1451.